All right, guys, what is up? And welcome to the first of hopefully many trivias in the Kingdom Discord here. On the line, we are giving people who are taking part in this a free month of the Kingdom Discord. You get access to all of the educational information, you get to talk to a bunch of people who have some really awesome training ideas. You see it on After Hours, you see it on YouTube. You can join the Discord. You pay for a month, whatever. You join into here, you can get a free month. It's absolutely awesome here. I am joined by my fellow trader slash investor slash animal trading strategy expert Purunga. Purunga, how you doing, man?
Doing well. Good Saturday. Good morning or afternoon. How are you?
Yeah, it's a good morning for him. It's good morning for him. It's a good afternoon for me. So we've got 4 people in for the first one here, which is totally cool. Again, this is a Kahoot that is based on finance and stocks, and it is based on speed and also accuracy. So make sure you read the questions carefully and fully here. And again, we will do a little bit of commentary as we go throughout here. There's 20 questions, 20 seconds for each one. You guys, good luck to you. I will start it up now for you. We will see the first question here for you guys. So the first question that we will get is a company announces a stock buyback program. What does this typically mean? And these are your 4 options. So read the 4 options and think about which one it means if you have a company stock buyback. What would that mean for the company? Hopefully, we guys can know what it means when you have a stock buyback. And if you don't know, feel free to guess. There is a timer. And the correct answer is it is often perceived as a bullish signal. Purunga, we already know about buybacks, right? What do you know about buybacks?
Yeah, of course. The company's buying back the shares, outstanding shares.
Yeah. Yeah, companies buy back shares. They're bullish on the company. They like what they're doing. They see the growth and the potential. So they are feeling really optimistic about the company. So they do a stock buyback program. They buy back their own shares. It is an absolutely amazing feeling for you to have. So again, with these questions here, there is a timer. So feel free, as always, again, if you're running out of time, you're not sure, feel free to guess it. There's 19 more questions. These leaderboards get very, very intense towards the later stages here. So if you got the first one wrong or you forgot to answer, no big deal. We have plenty more to do. We have Train Love, who actually made 2 accounts. Or maybe he just is glitching. I have no idea. But anyways, moving on to question number 2. Herd behavior in financial markets often leads to which of these 4 options? I have not heard of this, Purunga, until I looked it up. Do you know what herd behavior is? Oh, wow.
No. Well, that was fast. No, I do not
Yeah.
know.
So herd behavior it leads to asset bubbles, kind of thing about like the dot-com bubble back in '01, if you remember, where you had a lot of people about the hype behind herd behavior. Everyone was falling into it and everything else. And what happened? We had the dot-com bubble crisis of '01. Believe it or not, people are thinking that we have a herd behavior right now in AI, just like Train Love just said, right? We're looking at AI as a potential herd bubble. Maybe it is. Maybe it's not. I have no idea. Only time will tell. I hope not for my portfolio, but yeah, herd behavior, Purunga. Isn't that interesting? I mean, it kind of fits you, right? You do the animals in
There you
trading
go.
strategies, right?
Yeah, there you
So,
go. There you go.
so I think it makes a lot of sense, right? So, yeah, very interesting question there. So right now we are looking at Train Love in first, Social Raccoon second, Stray Cat third, ABCTSY in fourth. Everybody's got some points on the board. Woody Pony, don't worry, we got 18 more questions as we will keep it going. Question number 3. What is the maximum loss for a call option buyer? Again, keyword there is buyer. I think Purunga gave me this question to put on here, if I'm not mistaken. Purunga, right?
I don't think so.
Oh, all right. Well, the correct answer, you guys are all very intelligent individuals. It is the premium that you pay. Again, as you are buying the option, the most amount of money you can lose is how much you paid for it, which is called your premium. So very nice job. Let's see what we're at for the leaderboards here. Train Love is on a hot streak, 3 for 3. Train Love is using AI, which is why he put AI bubble in the comment section. I can promise you that. But very nice job, guys. Again, we have plenty more questions to go. Some of these are very difficult, I will tell you. So it's not just all like, what's 2 plus 2? Like, there's a lot of really good questions here. Purunga, take away the next one for me.
Selling a put obligates you too.
And those are the options. What do we got? I want to play the Jeopardy music in the background, I feel like, you know?
Yes. And that you, yes, buy the underlying. Yes. If you sell a put, you are agreeing to buy the shares at a later date at the green on strike price.
That is correct. And Purunga is a master of selling options. If you're not following his alerts, I don't know what you're doing. And check him out on YouTube as well. Purunga does a lot of selling options as there as well. He's a lot more active than I am. He's selling them like every single day, I'm pretty sure, or closing or opening positions. Purunga, I don't know. Do you open one a day, I feel like?
I've been trying to go for 2 to 4 trades opening a day.
That's way. I do like one a week, dude. Let me tell you, I'm not going crazy like you are.
This is my only job, though. You got to remember, you got a job, so.
Oh yeah, man. I wish I didn't have a job sometimes. You know.
Hey,
All right. So we got Strat Cat taking over second place. Look how close that is. Look at that. Nice little like 60-point difference there. And we're gonna keep it moving here. Go ahead, dude. What you got?
Clarify. I'm probably not a master. I'd say intermediate. Intermediate.
Hey, it's better than rookie, though, isn't it?
That's true. That's true.
All right, question number 5. Which one is considered a credit trade? And Purunga can explain this one afterwards as well, because, again, Purunga is the master of selling options. Now, I know, not master, intermediate selling options.
There you
go. And don't worry, there's plenty more questions to go. And the correct answer is cover call. Purunga, take it away. You want to add a little bit more to it.
So with a long put, you're going to pay money up the premium to buy the put. A long vertical spread is a debit trade. A diagonal spread is also a debit trade. So a covered call is where you're receiving premium today to agree to sell your shares at agreed strike price at a later date.
Absolutely. And in case you're wondering about what premium is basically the cash that you are getting paid for or what you're buying the contract for. So if you're selling options, you're getting paid the premium. So you're getting paid cash for the positions. If you're buying options, you are paying that out instead. So here we go. Leaderboard. We're a fourth of the way through the questions, and we have Train Love 1 on fire with 5 in a row. Absolutely amazing. But again, it's still anybody's race here. Moving on to question number 6. Which of these is typically considered a debit trade? Believe it or not, just like the credit trade, now we're looking at the debit trade to see if you can take a look at which of these strategies it may possibly be. I think the 20-second timer is actually a really good timer because it doesn't give people a chance to cheat. I don't know about you, Purunga, but
yeah, you don't want to. Yeah.
Right. So again, we are looking at a long call here. Again, debit trade. Debit basically means you are paying for the option. So you have cash secured puts. Those are ones where you are selling options and then you are obligated to buy shares later, but it's not considered a debit trade because you're not buying the shares right away. You may be assigned them much later on. So things to keep in mind about as a result. Cover call, we went over already. Short iron condor is basically that you're selling options in both call sides and put sides. So that is still credit trading, not debit trading, as we know. Whew. All right. And we are going to keep it moving on to the next one. And again, plenty more questions to go here, guys. Again, even if you don't win, if you learn something, you are a winner in the kingdom, in my eyes, at least. Moving on to the next question. What does an ADR represent? An American Depository Receipt. I would be curious to know if anybody knows what it means, because some stocks do have what's called ADR listed in it. Purunga, do you might know the answer to this one? Let's look at the options.
I do, only because I own ADRs. Otherwise, I would not know.
That is correct. Very nice. So ADR is a very, very most common one that I know of that I own is Novo Nordisk, because they are a traded company in Norway, but they are still giving us shares that you can trade in the U.S. Purunga, which ones do you own that are ADRs?
I own NEO.
Yeah.
I own, I think, PSNY Polestar. I think that is a ADR.
Mm-hmm.
I might own a couple more. I can't remember off the top of my head. I'd have to look. But those two EV
MT. Oh, yep. Metaplanet. Metaplanet's one because they're based over in what crypto? They do Bitcoin and stuff like that. They're based over in
Asia. I think it's
somewhere.
China. No, Japan. There we go. Asia.
Japan. Thank you. Yep. Hey, I was just. Did you hear me drag it out for no reason?
Yes.
I was just like somewhere overseas. Yeah, so see, StratCats learned something new today. See, yeah, who would have thought ADRs are foreign traded companies that you're allowed to trade in the U.S. Isn't that really interesting? This is what Fridge Financials and Purunga brings you guys. All right, this is what it's all about: is learning as we go. Question number 8: If interest rates rise, what happens to the price of existing bonds? Keyword: existing bonds. See if you know the bond market. See if you know interest rates. We were talking about Jerome Powell, Jackson Hole meeting. Pruitt, did you read anything about the Jackson Hole meeting yesterday?
I was in the live stream listening to him talk, but that was about it.
Yeah. Right, and they're talking about those. He's talking about. It seemed like he was really like leading it up for a rate cut in September. Correct me if I'm wrong on that one, right?
Yeah, he either said they're looking at it seriously or implied one of the two.
Yeah. So if interest rates rise, what happens to existing bonds? Now, here's the thing to think about, right? The interest rates and the bond rates, they inverse each other usually. So that's how it always goes. Because what happens is the existing bonds become less valuable. Because if right now interest rates are say 6%, then you're getting a bond at 6% APR per year. But if they raise rates to 7%, the new bonds come with 7% rates, which makes the 6% ones less valuable, because why would I buy the 6% one when I can buy the 7% bond instead? So it's very, very interesting to think about that way. I don't know if that makes sense, Perunga, or not, how I explained it. If you want to add to it, you can. But
no, it makes sense. I honestly don't know tons about bonds, so that I was curious to know the answer to this.
Yeah, so I mean, because I mean, if you think about it, like if you buy a bond now, you get 6% APR on it, but then say rates go to 7%, then your 6% bond no one wants anymore.
Right.
Why would I want your 6% when I could buy your 7% instead? So it becomes less valuable. So it decreases in value.
Makes sense.
Yeah, hey, Fridge Financials has got the knowledge, guys. Let me tell you. All right, moving on to question number 9. We have Social Raccoon taking over first place. Train Love, it's okay, dude. We got plenty of time. Don't you worry.
And plus,
he also says,
Sambo,
wouldn't people?
So I don't think Sambo has a free membership already. So I don't think his. Yeah, but go ahead.
Maybe he'll give it away. Who knows? Wouldn't people move to them for more security? Yeah, people go to bonds more security. Yes, that is 100% correct. Especially if you're looking at a recession and stuff like that. That is 100% correct. So you are correct on that one, Train Love. But we're talking more about the existing bonds, not the new issued bonds. Moving on to the next question. Question number 9. What option strategy is considered neutral? Short strangle, long put, zebra, Perunga's favorite, and long strangle. Perunga does a lot of zebra. Yeah, dude, I can't follow what a zebra is sometimes. Let me tell you, I have no idea.
I like it.
Yeah. Correct answer is a short strangle. And Perunga, you want to explain why short strangle is considered neutral?
Yeah, short strangle is really a naked put with a naked call. So you're banking on, you're selling a naked put and you're selling a naked call. So you're hoping that the stock stays within that range. So if it's a $100 stock and you sell an $80 put and a $120 call, you're hoping that the stock stays in between those two, the 80 and 120.
Absolutely love that. It is very risky because that's selling naked options is super risky. So you got to be very, very mindful of that, because again, it's a need. You have to, if you don't have the cash and you sell a naked put option, you can't buy shares. You could get into a margin call situation. Same thing with call sides, I believe, too, right, Perunga?
Yeah, I mean, for me, I'm more comfortable selling a naked put, quote unquote. I usually have the cash to make it work, but I try to cap my risk on the upside, just especially when we're in a bull market and your loss is infinite on the call side as opposed to the put. It's not quite infinite, right, because it can go to 0.
Correct. Absolutely love that. Always love this insights, Perunga, let me tell you. So scoreboard we are looking at Social Raccoon in first place with 8 questions answered correctly. Train Love, Strat Cat, ABCTSY, and Mr. G, who I believe just joined us, Mr. Galaxy. Welcome in, my friend. You still got time to get these questions right and decline the leaderboard. Don't you worry, dude. I appreciate you coming by. And even if you don't win, hopefully you learn something new. Question number 10. Delta is a rough estimate of... This one came from Perunga, I'm pretty sure.
It did.
Mr. Galaxy says hi. Hey, man. How's it going? Happy Saturday, as per usual. So what is Delta a rough estimate of? Oh, that's the name, Tyler. See, I'm so uncultured sometimes, dude. Like I'm just not good with names.
It's all right. It's in his educator bio.
Go ahead.
It's in his educator bio. That's why I know. But go ahead.
Oh, dude. Man. I got to read more. Reading is important, guys. Don't forget that. Probability that it will expire in the money is definitely a good way of looking at it. Again, so if you have like a 20 delta, for example, that means looking at a 20% chance of your option being in the money. So it's kind of the way of probability. Usually when you're buying options, they're pretty relatively low compared to selling options for the most part. give or take what you're buying and what the contract is. So delta is a very good thing to know because you kind of know which option has a good chance of being profitable and which one is one where you might have to cut for a loss. So something to keep in mind about as you are trading options.
And then in terms of selling, the likelihood of it being assigned to you, right? Roughly, right?
Right. Yep. Absolutely correct, Mr. Galaxy. It's okay, dude. I'm glad you made it though. Even if we can get these if you guys love this, we'll do it every single week. Don't you worry. We'll get going here.
Yeah.
Moving on to so we're halfway through. And again, still anyone's game, believe it or not. We still have 10 more questions. All it takes for Social Raccoon to disconnect from his internet for 5 minutes and then he's over. So, do you know how many times, let me tell you, how many times when I was doing this in my class with students and they'd be like, oh, Mr. I got kicked off the internet. I got kicked off this. I'm like, well, I guess you lost. So. All right, moving on to question 11 here. Yeah, right. Which of the following is not considered a market participant? Institutions, insiders, retail traders, or credit rating agencies? This one I put in myself. Not considered a market participant. Which of these ones does that fit? If someone is AI in this, please let me know. Credit rating agencies is correct. We all know institutional buyers, insiders, and all of us in this Discord right now are retail traders. Unless you're really a good insider and you know about it. So that is correct. Only credit rating agencies are not market participants. Very nice. That I really thought that would stump somebody, but you guys are all very, very intelligent individuals. So clearly I did not with that one. Moving on to the next one, question 12. Which option has unlimited risk? Wow, it's almost like Purunga just answered this like 3 questions ago.
I did give the answer. I forgot I had this in there.
So let's see let's see who's been paying attention to this to Purunga's amazing explanations here, and not just listening to me babble for 20 minutes straight. What we got? Feel free to guess. It is a naked call option. Purunga, explain why naked call option has unlimited risk.
Yeah, it's so a naked put does have close to unlimited risk, but the stock can go to 0 at least. So if you had a $20 stock, 20 times 100 is 2,000. So that would be your max loss. Let's say if you do a naked put, whereas if it's a naked call, it can go, forever up. So it's unlimited in that range.
Right. And think about this, right? If you put in $2,000 into a stock, the max you can lose is 100% because it goes to 0. Stock prices don't go below 0. They just get delisted, right? So your stock prices they can't go anything below 0. There's no negative prices for stocks, which I think would be really funny if there was. But there's no negative prices for stocks when you're going down to to those put sides, right? So you're kind of limited on that's like a floor. Like the lowest you can go is there, but call sides you can go as high as it can go, right? We've seen meme stocks and GameStop pump and stuff like that. Like these stocks go as high as they want to. So naked calls have that unlimited upside risk along with it. So very nice, Purunga. Thank you for that. Moving on to Mr. G's moving on up here. Okay, Mr. G, I see you. Mr. Galaxy, that's what's up, dude. Okay, welcome again for tuning in for you guys. As always, again, we got plenty of time to go here, guys. Don't worry. And again, we'll be back here next week. We'll come up with some more questions. If you guys enjoy this, just let us know. Either in the comments section on YouTube or, in the Discord as well. Which tool does the Federal Reserve primarily use to control inflation? This one might be a tough one. I like one of these answers is really funny. So hopefully don't pick it because I would have to have a long conversation for you about what it is. So believe it or not, the answer is actually open market operations. So I think thankfully nobody picked the yellow one, printing money, because I think printing money. I think we all know that that's the opposite of how to control inflation, is to print dollars. Changing consumer spending habits, they can't do that really. They can't change what the consumer does. So I don't think Jerome Powell will come knocking on your door and saying, hey, Purunga, stop buying stuff. So at the end of the day, it's kind of like up to us for discretionary. Municipal bonds, yes, to an extent, but open market operations is more of, those interest rates and focusing on kind of controlling the markets in that way. So it is a little bit of a different one. That one is a very, very tough one to answer. So as I said, some of these are a little bit challenging, which means this leaderboard may change. Mr. G was the only one that got it right.
I would have gotten that one wrong.
Yeah, it's a tough one, dude. There's some really, really tough ones out here, let me tell you. But again, there's some of these are hard, you know. Moving on to question 14. Which measure represents risk-adjusted return? Alpha, beta, Sharpe ratio. Oh, Mr. G is a finance student. Oh, he's gonna get this one right then. So risk-adjusted return. Alpha, beta, Sharpe ratio, standard deviation. Ooh, see, I threw some hard ones in here for you guys. It ain't gonna be a walk on easy street here,
Yeah.
unfortunately. The correct answer is the Sharpe ratio. A lot of people talk about the Sharpe ratio and how it represents things. So the Sharpe ratio is a very common measurement that people do use about your risk. The higher the Sharpe ratio, the more risk you have, and the lower the Sharpe ratio, the better. I believe Mr. Galaxy. Oh, you didn't answer it. Oh, okay. He said I ran out of time. But Mr. Galaxy is a finance student. I'm almost certain. But Sharpe ratio, I think 1 is the standard. Around 1 is your standard ratio, Sharpe ratio for the S&P 500, if I'm not mistaken. Is that correct, Mr. Galaxy? Do you know that one off the top of your head? If you don't, it's totally cool. I can also just Google stuff on my phone, but I don't. Okay. Great. So now I'm gonna look stupid on this video right here. Perunga, find some time here. I'm gonna find the answer to this.
Hello, everyone.
Yes. Okay, awesome. So Sharpe ratio between it's around 0.68 to 0.89 for S&P 500. So, again, but it's a lower risk, which is why it's lower value. So it's higher. If you have a higher Sharpe ratio that you calculate for your portfolio, you're taking on more risk as a result of it. Moving on to the next question. Oh wow, Train Love took back over first place. It's getting a little interesting here. So moving on to question, I forgot what number it is, but this one's an easy one. Hopefully, Theta. But 15, theta represents what? This one takes a little bit of reading, so I apologize for that one.
Well, that's mine.
Oh, oh, look at that. Time decay of an options premium. Again, you hear of theta decay as option sellers like myself and Perunga. We love theta decay. As option buyers, not so much. And theta decay usually ramps up when, Perunga? When does it ramp up usually?
Well, 45 DTE, it starts to accelerate. I mean, it accelerates as it gets closer and closer to expiration, but 45 is when the curve kind of steepens.
That is absolutely 100% correct. Very nice, Perunga. I'm not quizzing you, Perunga. I know you know the answer to that one. Don't worry. Could you imagine if I played this? You know, I know all the answers, and I played this to get a free membership, even though I already have, even though I'm already like an admin on here.
Yeah. That'd be good.
All right. Moving on up. Okay, moving on to the next question. 16. Rho is usually the least important Greek because why? Honestly, Perunga, I don't think I never hear anybody talk about Rho ever. I don't know about you. I never hear it.
It is the most overlooked. I don't know about least important. It's really the most overlooked is what I should have wrote, but yes.
Interesting. Well, because it is based on interest rates, right? And interest rates are really not changing that much over the years, right? It's just like maybe a cut here or a raise here. So there's not really much to it. I would like to see what the data is for Rho when we have September rate cut potential, right? So that's probably going to change it a little bit.
Yeah.
If I'm not mistaken.
It's, yeah. Post. Exactly. Yeah. It's more of effect on longer term options than shorter term options. So it'd be something to look at like now.
Gotcha. So would you say maybe it might be good for like companies that'll be heavily positive on interest rate cuts, like real estate, for example, I think would do pretty well as a result of it?
It's definitely, that probably plays a factor. It's also, look here, because I don't look at Rho very much either.
Yeah, and StratCat wrote. No, go ahead, dude. Yep. No, what? Let me hear it.
Oh, he didn't read my post.
I was saying StratCat says, "Dang, I just read Perunga's after hours post on Rho." So
yes, that's why I put it in here. But yeah, it's Rho is positive for long calls and short puts, negative for short calls and long puts. So basically, if you think that interest rates will decrease, you want to sell calls and buy puts more than the other way around.
Interesting. See, I don't really know much about Rho, so I'm glad I learned something new today. You think that I would know everything? I don't know everything. But I didn't know about that.
I learned about it to make the post because other than I knew delta and theta very well, but then gamma I did not know, vega did not know, rho did not know. Those are things to look at, but I didn't really pay attention to them. So
Yeah.
yes,
Right. Train Love says in crypto they changed for borrowing. I think when I used to do crypto futures back in the day with derivatives because of margin. I remember. Oh, okay, interesting. I'll have to look into that more. But more importantly, ABCTSY has an answer sheet of 3. Very nice job. And if you're guessing, don't tell me. Okay. I believe that you get these all right because you know what you're talking about here. Okay. So be like, oh, I'm just guessing. Nope. Don't tell me that. Okay. I believe that you're knowledgeable. 17. Beta in finance measures. This one I know very well. This one I know. And if you don't know it, I will tell you what it is. Do you know what beta is, Purunga? Besides if you're like a beta trader?
I just know it's a minor Greek, but I honestly do not know beta that well. I'm an accounting major, not a finance major.
So beta. Oh, I have the wrong answer for this one. Oh, good, no one got it right. I put the wrong answer. It is volatility of the stock relative to the market. I must have picked the wrong one.
Dude.
Sorry, guys.
Wow.
Sorry. Hey, it's my first day jitters. It's okay. I made a mistake. It is the volatility of the stock. So everybody would have gotten points on this one. So I apologize. Thankfully, everybody got it wrong. Hey, we all made mistakes here on the first one. Do not unsubscribe from Fridge Financials for this. I promise. I'm sorry. There's 20 questions. I'm bound to get one wrong here. So it is the volatility of the stock relative to the market. So for example, everyone's laughing at me in the comments. Yep, thanks guys. For example, dividend paying stocks usually have a very low beta because obviously they don't move as much because they pay dividends. Whereas like Nvidia, Google, Amazon, those have a higher beta because they move more compared to the S&P 500, which moves at about 1 for a beta, is like the standard level for things. So,
although 2 of the
if you
3
go on,
you just named have dividends, but go ahead.
Which one has dividend?
Nvidia and Google and Nvidia.
Yeah, well, because
they're minor though. They're minor.
Nvidia,
they're minor.
I know Nvidia's Google is like 4 pennies, dude. Like it doesn't
it's
matter.
It's super low. Yeah, it's low.
Shane wants to talk to my manager. You want to come talk to my principal at the school, dude? You can if you want. He'll be like, look at this guy over here.
Or royalty.
This guy's an idiot. What's he doing?
Royalty might be your manager in this instance.
That is true. It's probably royalty. Yeah, hit up royalty and be like, yo, Fridge Financials, get this dude out of here. So my bad. Hey, we all make a mistake here. Nobody changed the leaderboard. So we're just going to pretend that question got thrown out. It's no big deal.
Everyone got
if anything else is wrong, I apologize. Yeah, everyone got it right. Yeah. Which financial statement shows a company's assets, liabilities, and equity at a specific point in time? Income statement, cash flow statement, balance sheet, statement of retained earnings. Do you know statements for companies if you're investing in?
Yes.
Balance sheets. Very nice job, guys. Awesome work, as we know. So yeah, it's always good to know this, right? When you're looking at earnings, see how the company's doing. You want to go long on a company. It's always good to know the financial statements here, right? 2 questions left, and it is a tight race still. Question 19. What does a stock split do? Not a reverse one, a regular stock split. Not a reverse one. Gotta make it known. There's a difference. What does a stock split do? Very nice job. It does increase the number of shares by reducing the price. Now, believe it or not, stock splits are actually considered bullish on a company because it gives more shares available to traders. It reduces share price. So people say, oh my God, I get to buy NVIDIA at like $100 when it was $1,000 before. So the psychology behind it also helps to bring in more investors, to have a lower share price. You get more partial shares, maybe. It's a psychology thing. It doesn't change like how much money you have, right? It just, right, Purunga? What are we going to add to it? Feel free.
Well, also, in terms of options, it can bring in more people to trade options because they, if NVIDIA is 1,000, they might price them out of buying those options. Where if it goes to 100, they can do more options trading on there, more likely to.
Absolutely. Love to hear that. So yeah, I'm not buying Netflix options. Yeah, Netflix is way too expensive. If it has a split, then yeah, I can play options more with it. So we got Train Love yeah, oh yeah, for sure. Train Love in first place, Social Raccoon right behind him. It's less than 200 points. Stratcat, you can still make up some ground here. I don't want to say other people because I don't know how many points you can get on this game per question, but it's going to be a close one for the end. Last question of financial trivia. Which of the following actions increases a company's leverage? Issuing new equity shares, paying off debt, taking on additional debt, or increasing retained earnings? Last question for trivia for a free month on the Kingdom. What is it? Suspense is killing me. And it is actually taking on additional debt because, again, leverage, what people talk about, the most common way of looking at leverage is margin. When you want to trade on margin, a lot of people will do that and trade on margin because it's access to money that they don't have themselves. It is more risky, but the idea behind it is that it's additional debt to give you additional leverage to get you ahead of the game. They can use the debt that they take out to then grow the company, to expand it, and they use it as leverage. Paying off debt actually reduces leverage because it's your actual money. Parunga, anything to add on that one before we wrap it up here for the day?
No, I think you covered it pretty well. It's exactly, yeah, leverage. If you are taking on more debt, you're increasing your leverage.
Absolutely. All right. So the leaderboard, here we go. Coming in the podium. This is pretty cool. I like how they do this. Third place at 10,000 points is my boy Strat Cat. Congratulations. Second place, Social Raccoon. And first place at the very, very top is our one and only Train Love One. Congratulations, Train Love. You've gotten a free month of the Kingdom Discord. I'll make sure to hit up Royalty and we'll let him know who won so that way he knows. Yo, Sambo, I always love having you, man. Sam and I go way back, Broom. I don't know if you know this, but him and I go way, way back from like a couple years now, I think. Yeah. So, Sambo, always shout out to you as well. This was super educational. Learned a lot. Congrats, Train Love. Yeah, man. I hope you guys, really enjoyed this. If you guys want to, are you guys cool doing this every single week? Let us know, obviously, in the comment section. Let us know on Discord as well, as per usual. If you made this far in the video, if you're watching on YouTube, make sure that you are subscribing to both myself, Parunga, whoever you want to that has a good financial education for this one. And Parunga, anything else you want to say before we get out of here?
No, thank you for the feedback, everyone. Glad to hear that everyone enjoyed it and that it was educational. But it was a fun time.
Yeah. Yeah, absolutely, man. Love to hear that. Yeah, thank you guys so much. I hope you guys have a great day. And don't worry, we will be in touch with you, Train Love, for your free month. So we'll keep that in mind. And again, check out the Kingdom if you haven't already done so. And good luck to the rest of you guys in the market for this week. And we will see you guys next week.